Do markets move randomly, or is there a hidden rhythm? What if all those wild price swings were part of a predictable pattern, one shaped by human behavior? That's the core of Elliott wave theory, created by Ralph Nelson Elliott in the 1930s. The idea markets move in cycles, not because of numbers, but because of our collective psychology. Elliott wave can seem complicated, but you don't need to memorize every rule. The real power is in understanding the psychology behind price moves. This video breaks down Elliott wave into 12 simple truths anyone can use. We'll decode the market's secret language, one wave at a time. So grab a coffee and let's get started. Disclaimer: this is for educational purposes only. Do your own research. The first secret: markets are driven by emotions, not just numbers. Every price move reflects fear, greed, panic, or euphoria. Elliott wave theory maps these emotional shifts. It's not about perfect prediction, it's about reading the market's mood. Ask yourself, are you trading your feelings or what's actually on the chart? The market's basic rhythm: 5 waves up, 3 waves down. 5 impulse waves move with the trend, then 3 corrective waves pull back. This cycle repeats everywhere. Try spotting this 5-3 pattern on any chart. It's more common than you think. Understanding this structure is the foundation of Elliott wave. Can you see the rhythm? Here's where it gets interesting. Waves are fractal. Patterns repeat on every scale like Russian nesting dolls. Zoom into any wave and you'll find smaller waves inside. This works on any time frame, from minutes to months. Are you seeing the big picture or getting lost in the details? Fractals help you spot the main trend. Don't obsess over perfect wave counts. Elliott wave is more art than science. Focus on the overall rhythm, not every tiny move. Feel the market's momentum. Is it strong, weak, trending, or sideways? If you're lost in complex counts, step back. The goal is to be in sync with the market, not to be perfect. Are you overcomplicating things? Each wave has a personality. Wave 1, cautious optimism. Wave 2, doubt. Wave 3, powerful confidence. Wave 4, indecision. Wave 5, emotional, often weak. Corrective waves: A is shock, B is false hope, C is final sell-off. Recognizing these moods helps you spot where you are in the cycle. It's not just counting, it's reading the market's emotions. Can you sense the mood behind the moves? That's the real edge. Markets move on mass psychology, not logic. Extreme fear often signals a bottom, extreme greed, a top. Elliott wave helps you spot these emotional extremes. Ask, where is the crowd right now? Panicking or euphoric? Act rationally when others don't. The principle of alternation: corrections rarely repeat the same way. If wave 2 is sharp, wave 4 is usually flat and complex, and vice versa. This balance helps you anticipate the next move's character. Expect variety, not repetition. Are you ready for the opposite of what just happened? Elliott wave and Fibonacci ratios go hand in hand. Key levels: 38.2%, 50%, 61.8%, 161.8%, help project where waves might end. Wave 2 often retraces 61.8% of wave 1. Wave 3 extends 161.8%. Use charting tools to apply these levels for targets and stops. Fibonacci gives you structure and precision. Have you tried it on your charts? Don't stress about perfect wave labels. The goal isn't to win debates, it's to make better trades. Focus on whether the market is trending or correcting. Labels are guides, not rules. Are you chasing accuracy or understanding the bigger picture? Look for harmony across time frames. If daily, weekly, and hourly charts all show the same trend, your setup is stronger. If they conflict, be cautious. Don't get stuck on tiny time frames while ignoring the big trend. Align your view for higher confidence. Wave counting blends rules with intuition. The science know the guidelines. The art develop pattern recognition through practice. You'll start to feel the rhythm over time. Don't expect perfection, focus on probabilities and crowd behavior. How many charts are you studying each day? That's how you build skill. The hardest secret: stay emotionless. Don't get attached to your analysis. Markets don't care about your ego. If your wave count is wrong, adapt. Stay flexible, update your view, and let the market lead. Can you observe without bias? That's the key to long-term success. Elliott wave isn't a crystal ball, but it's a powerful lens for reading market rhythm. Understanding these 12 truths sharpens your sense of structure and crowd psychology. With practice, you'll hear the market's beat and see its story. Are you ready to ride the wave, or will you let it ride you? Share your biggest takeaway in the comments. Like, subscribe, and remember, this is not investment advice. I'm not a CB registered analyst. Do your own research. Markets are risky,